Major funding for CFO Studio is provided by Real Estate Strategies Corporation, advisors to CFOs, management, and boards of directors in the acquisition and disposition of leased and owned real estate. Visit www.realstrat.com.
Hi, this is Andrew Zezas, your host at CFO Studio. I'm joined today by Mr. Eric Eaton. Mr. Eaton is a global finance and operations executive, and he's here today to talk to us about a pretty interesting topic. Eric, it's nice to have you here on CFO Studio.
Andy, thanks very much for having me in.
Our topic today is the risk of everyone waiting for everyone else. What the heck does that mean?
Well, Andy, what you find in today's climate, especially within the economy and the recovery, there is a tendency for many businesses to wait and see what everybody else is going to do before they commit to actions. This has a lot of risk with it, but it also has a lot of opportunity. And I believe what businesses need to do is that, on the one hand, businesses are cautious about their steps in participating in the recovery, but they need to be careful not to play into what is generally referred to as the self-fulfilling prophecy, that as you're cautious and concerned about, not so good things happening, you can actually go on a course of action that would promote that outcome, and you want to guard against that.
So the most important thing I just heard was that there's opportunity and that there's a way to seize the opportunity, and I suspect you're going to tell us a little bit about that as we go through our questions.
Absolutely. Within the environment today, there's a significant amount of opportunity just waiting to be seized upon.
Excellent. Excellent. So let's talk about opportunity and let's talk about challenges. We've come through this, or we're coming through this rather funky economy. What opportunities and challenges occurred that maybe were not on everyone's radar?
Well, one of the consequences of the economic downturn that businesses really began to focus on, they took a very introspective look at their strategies, their business models, and their cost structures. And those tended to be very out of need, tended to be very intensive reviews. And companies took the appropriate adjustments, and that's why many were able to survive that particular episode within their life cycles. Now what we have is we move out of the downturn and into the recovery mode. They need to continue to maintain those steps as they did during the downturn, but now they need to focus on the ability to invest and expand their businesses and grow their businesses through investment in new products and in market expansion.
Okay, so in that vein then, given what's going on, what concerns you most? Consumer spending, national debt, or other global economic issues?
Well, I would have to say within the context of three, all of the above, but not necessarily in that order. With those elements and with many others, you find that these are all interconnected in terms of not only the U.S. economy, but the global economy as a whole. And these are all indicative of the fact that, given the fact that everyone is waiting for everybody else to make a move, there's a significant amount or a significant lack of confidence within the marketplaces. And where you tend to have that lack of confidence, it impacts consumer spending rates. It also impacts the level of investment. All of the above will then tend to impact not only the U.S. recovery, but can have an impact on the global recovery, for which we're all interdependent on.
We are all interdependent, aren't we?
Yes, we are.
So while companies are being cautious, while everyone's waiting for everyone else, I understand that global balance sheets are not so bad and that there's an awful lot of cash sitting in corporate coffers. How did this come about?
Well, as I understand it, there are some conservative estimates that there is at least $2 trillion presently parked on corporate balance sheets.
Say again, how much?
$2 trillion, not billion, but $2 trillion presently parked on corporate balance sheets.
$2 trillion.
$2 trillion. But I would even take that a step further, that you would also include funds available through various private equity and venture capital firms. If you include those, that number is probably substantially higher.
Wow. So where did all this cash come from?
Well, businesses did a very good job during the recovery, as I said before, in terms of making very intensive and introspective reviews in terms of their strategies and their cost structures. They have learned how to do quite a bit more with less. So they have elicited substantial productivity gains as we've gone through the recovery so far. But productivity gains of this nature, they are there and they will become lasting, but businesses will find that as part of their overall success, these productivity gains will begin to flatten out, and that their opportunities for growth going forward in the future would be based on the ability to generate additional revenues. This revenue generation will not necessarily come from pricing, and I would actually say it probably won't come from pricing opportunities, but it would come from businesses' abilities to introduce new products or to expand their businesses in their marketplace.
Or maybe acquire additional customers.
Or acquire additional customers.
We've been told that the productivity gains coming from increases in employee productivity are probably not sustainable in the long term. That employees are getting burned out at some point, that those productivity gains will have to be replaced by other means of revenue growth, and I think you pretty much clarified that. So given all this, is business improving? Are there marked sectors, are there marked indicators where we can actually say things are getting better?
Oh, absolutely. What you find in this particular recovery is that there are improvements in the recovery. You do see the jobs picture improving, albeit it tends to be somewhat choppy from time to time, but there is improvements in the job picture. There are improvements in corporate performance in terms of profitability and liquidity. But again, as I said before, we want to guard against the tendency to wait on everyone else to move forward in this recovery. And businesses want to be a little more proactive. This is a great time to seize upon opportunities for new investment. You have a great opportunity to redeploy assets and resources that have been displaced given the downturn and get them back into play, because there's a lot of value in that. And with these investments, not only do you get a chance to redeploy or utilize resources that are presently in the marketplace, but it also moves us forward towards creation of new jobs and new employment.
Okay, I understand that completely. Then tell us, if you will, and we're about out of time. I think we have time for one more question. Tell us, if you will, what a great CFO should be doing to lead his or her company through these choppy waters toward being able to benefit by what's in front of us in terms of the economic recovery.
Well, interesting you use the adjective of choppy. It has been choppy to a great extent. But as in any endeavor, I don't know if you've ever gone deep sea fishing, you usually catch your best fish in the choppiest water. And that's the circumstance of taking advantage of opportunities that are in front of you. For most CFOs, that'll involve partnering with the rest of the members of their management team to make sure that they're moving forward to execute on the business's strategy and to take advantage of the investment opportunities that exist in this marketplace or in this environment.
Eric, I think we've got a lot more to talk about. I hope we'll see you again at CFO Studio. I want to thank you for sharing your ideas and your insights with us today.
Well, absolutely. Andy, thanks very much for the opportunity to be with you today.
This is Andrew Zezas with Eric Eaton, saying thank you for watching CFO Studio. We'll see you again.
Major funding for CFO Studio is provided by Real Estate Strategies Corporation, advisors to CFOs, management, and boards of directors in the acquisition and disposition of leased and owned real estate. Visit www.realstrat.com.